After 30 years, yes, plus 30 years of trading, I have many techniques which I could show you. And I want to share with you this one in particular using the VWAP. So it's based upon very high volume and trend signals, based upon very high probability the price is going higher or lower. And it also tells you when it's consolidating as well. So allow me to spend a few minutes with you to explain what goes on in this situation. This is an hourly chart on gold. So if you're looking to make a lot of money in gold, double your account, blah, 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 you've heard it all before, then this is one technique which you might just love. So what we've got here is part of the gold on steroids system. Now we have a get funded group where I give regular updates and settings and trading ideas to help people get funded, in other words, using my 30 years of trading experience. And there's a reason why I'm still trading after 30 plus years, and there's a reason that most people fail within 6 months. It's because they're not trying hard enough, or they're not tenacious enough, or they're talking to the wrong people. Most people give up within 6 months. That's the truth of it, because they have lost money, they're not using demo accounts or whatever, they get emotionally involved. So let me give you the trading rules. You can probably see what they are at an instance, because you can see where the sells are and where the buys are. But let me give you the trading rules. So there is a VWAP here, the yellow line. If the price is above the yellow line, you're looking for buys only. Whenever the price moves below the VWAP, we are looking for sells only. This moving average, all special settings, by the way, only available if you're in the Get Funded group. So if you're in the Get Funded group, you'll have these settings and regular updates. And it's 12 months of updates and coaching and training. And because many people want to be scalping gold or trading Forex or oil or whatever it is, everyone has their own different technique and time frame they want to use. Now, this is based upon an hourly time frame, and it's by far the best, because it keeps you out from the noise. Now I've got an ordinary candles, but you can use volume candles if you are premium with TradingView. But candles is fine. Candles is fine. Don't use Heikin-Ashi, because we're looking at live, fast moving markets. The best times are, of course, London Open and New York Open. So bear that in mind. You don't want to be trading midday and during low volume times, and I'll explain that and give you confirmation. So what are the trading rules for a long position? Oh, you probably guessed. You probably guessed. Let's get rid of some of this. And so what we want to do is to see that the price finishes above both lines. Once the price finishes above both lines, we are then going long. So we can go on the next candle if you like, and our stop is going to be just below the yellow line. Let's get rid of some of these. And you can see this went up a lot. 486 pips, something like that. 420 pips, could have held it longer for 666 pips. So once you get in, you've got a nice tight stop there with below the yellow line there, if you can see that. As long as the price remains above those both lines, then you have a very strong indicator. Oh, excuse me. So volumes are really key to this. We use the volume weighted special settings, and this green line goes green when it's long, it goes red when it sells, and we can see here that the volumes, let me explain this, once we, again, special settings, we want to make sure that the price is green on the volume indicator and that the buyers are stepping in big time, and clearly they are. So, and above this black line is a key. It has to be above the black line. It cannot be below it. It's no good to anybody, man or beast. All right. So, and the price goes up. So once you see that the price finishes below the green line, that's the time to exit. You might have a target up here somewhere, doesn't matter. You can go for 2 for 1, but I wouldn't. I would be going for maybe the previous high. See that level here? That's a good one. Automatically drawn on your chart, 474 pips. Then you wait for the next setup. So here's one here. Let's see what the volume is doing. So again, it's come back to the VWAP and bounced off it, and it's highly significant. And then the price takes off again. Look at the volume, massive volume at that point there on a buying opportunity. So we could have said buy there, stop below the yellow line, and 2 to 1, something like that. Another one there. Look at the volumes here, down below, above both lines, and away it goes. This is very similar to what we do with the gold on steroids normal settings, but this gives you a better edge if you like. And you can also use it as scalping as well. You can grab 50 pips easily with high volumes. So let's see a few shorts. Here we go. So notice that both lines are below. There's one there. So the price fell below the VWAP, and look at the color of the moving average, and also see the direction of the moving average. This is seriously down, and 660 pips there. Again there. Let's have a look at check volumes on this one. Yeah, volumes are okay, but it didn't want to go down anymore. So again, you just go short, and then if it comes back up, you close it. Again, the breakdown is clear to see. Once the price moves and falls down, just check your volume indicator here. Make sure the sellers are stepping in, and they are. The other thing we talk about quite a lot in the trading room for members, VIP members, outside bars. These are really crucial because they give you opportunities throughout the trading day. So let's see how you've got a channel there. Can you see the channel? So whenever we see an outside bar, you definitely don't want to go long there. You definitely want to go short there. And you definitely don't want to go short here. That's the end of it. That is the end of it. There's another one. Let's see if we can find another one to just give you an example. You won't get many, but when they do, oh, there we are. It's a nice big fat one, isn't it? So we can see that the price moves outside of the channel. Once it moves outside of the channel, it's highly likely to be a reversal or a significant correction. The other thing it does, which is useful, you can see that the price is below the green line and above the yellow. So that indicates that this is in consolidation. Now at the moment, at this time here, you don't know how far that's going to go down. Once it breaks down, you go short below both lines. You don't know it's going to go 637 pips. You just don't know. So you've got support lines here, 214 if you want to. If you're going out and about and you're traveling and you can't monitor it too much, it's an hourly chart, it's very slow, then of course you can just set a target and let the markets do whatever they're going to do. So just check volumes coming in to the market at this stage above the black line, special settings, and away it goes. I wonder if we can see some more. A few short positions there. Short position there, short position there. Buying opportunity here. High volumes, so you get the picture. So if you want to get this, the settings for this, just become a member and we'll get you started. And you will need to get into the Get Funded group though, because I'm only interested in serious people who want to get funded and start making a lot of money. So contact me as soon as you can.